Good morning, this is John Piper with the pre-trading weekend video clip, and it's Saturday the 19th of March and we're looking here at a chart of the daily FTSE. I'm going to go back to the July low here because we've got this 5-wave pattern which we've discussed endlessly pretty much, which goes up to there, 5-wave, 5th wave there. Notice 4th wave support, which I'll just clear that. 4th wave support, well, you notice that 4th wave support is around here, just above 5,500, and yeah, there's a fair chance that we're going to see that level from this move. Currently we've got an ABC on FTSE. Let's have a look at that in a bit more detail. Okay, here's the hourly chart, peak here 6105. So A, B, C, and that's the reason this ABC formed to start the whole thing. Is the reason why I'm counting this as a correction primarily. It's not the only reason, but it's one of the main reasons. A, B, C. So that's an A and a B. We've now got 1, 2, and we've got a 1, 2, 3, 4, 5. So that's the low of 3, with waves 4 and 5 due. Now wave 4, again an ABC to start with it. So that's suggesting we're seeing a corrective move. Another ABC here. And then we've got this quite strong rally, stronger than I'd have expected really. Let's have a look at that in a bit more detail as well. Okay, here's a 10-minute chart. So A, B, C, A, B, C. Not supposed to count this, but it's 1, 2. Maybe we could count 3, maybe up to there, or even to there. That's what I'd say there. Then 4 down to there. Then that's possible 5. So that could be an ABC, as in A, B, C. Current decline doesn't look that impulsive though. It's also bigger than we were expecting. So I did say it's possible the low came in here because of that very sharp fall we saw. I think odds on there's still one further decline to complete this pattern. Maybe down to the waves 4 support. Let's go down a little bit lower just to see the pattern of this most recent decline. Okay, well nothing of note really. I mean we've got quite a nice spike actually there. So you could say that's a 1, that's 2, this is a 1, 2, 3, but it's all a bit conjectural. I mean it's looking fairly corrective. We need to see a bit of a sell-off before that's going to be terribly probably be too enthusiastic about that particular pattern. Just check Gecko prices, the market's going about 5708, so it doesn't really add very much, so slightly lower down. So it's possible this is the peak of 4, and it's possible that we're going to see a bit of a decline next week. The big question, or the big worry if you like, is this decline bigger than I'm expecting? It's looking corrective on the FTSE, it's looking corrective on the Dow, sorry, on the DAX, and also on the Dow. In fact, we'll look at the Dow in a minute. But of course, maybe it's an impulsive move. In fact, let's look at the Dow now on that. As I said before, the Dow's seen this very, the first move down was impulsive. We then saw the wave. Well, what I'm counting as B. Now maybe this thing here is all a 3, and maybe this thing is actually 4. So if that's the case, one more decline could give us a wave 5. That's one possibility. I still think new lows still seem possible, certainly on FTSE. We've got quite a clear count calling for another low. If we did see a 5th wave from this formation, it would certainly raise a fear that this could be an impulsive decline, and the giveaway would be the rally. If we see a fairly feeble rally following such a low, then that would be of some concern. Okay, let's expand this chart a little bit. Have a look at the rally in a bit more detail. Get down to 10-minute chart. So again, it's A, B, C, then a B wave, then a C wave. So it's a similar pattern really, but again, this drift doesn't look terribly. Looks like a corrective fall, suggesting we're going to go higher. So, all a bit open, but for now, I would conclude that we're still going to see higher prices. I think the QE is due to end in June, so I mean that might give the markets a bit more breathing space. Although I think it's becoming fairly obvious that the QE may be helping the banks' balance sheets, maybe boosting asset values, maybe demolishing currency values, but doing very little for the economy, which is not good news as the economy drives everything else into the day. So the more obvious that becomes, the more stock prices are going to have to fall down despite QE, because the basis of a stock price is earnings potential, and if the economy is sinking, then there isn't much. Have a look at the S&P in this form. Okay, the S&P is helpful, slightly clearer pattern I guess. You've got the 1 down again, you got the A, B, C. Not so clear here. We've got an A, B, C there. I wonder if some sort of diamond-shaped correction or something. I mean, it's certainly there. You've got that kind of formation, but again, it doesn't really help us very much. We do certainly have a 1, 2, 3. So there's still a good case for one more low to complete it. So for the time being, I'd go with that. So you know, there is indications the current rally could be impulsive, but at some point we'll obviously a retest, and it could easily go to new lows, and that would probably be the buying opportunity I'm looking for. So we'll have a gold now. Well, gold's seeing some similar in the sense. I mean, it's a far more obviously corrective pattern. There's no doubt. That's definitely ABC, but this could also be an ABC. So it's not impossible we're going to see a B wave decline. Sorry, a C wave decline to complete the correction. Difficult to say at this point because again, as with FTSE, as with the Dow, we're seeing this quite strong ABC, which could easily be impulsive. We just don't know at this point. On gold, this could easily be a complete correction, more so than on FTSE and the Dow. So whereas on FTSE and the Dow there's a much stronger case for that new low, not so clear on gold and pound dollar. Okay, well we've seen the consolidation. We're now seeing a quite strong rally. So the question is, are we going to see a C wave here? But this seems to be the report of the possible C waves or the possible new lows. Let's have a look at that in a little more detail. We'll go down a scale to the next chart down. Sorry, that's the hourly chart. Well, we've certainly got quite nice support around just below 1.6, which has held the market quite nicely. A bit of a garbage low though because of the way it's been formed. So yeah, I mean this could easily be a C wave at this point, and we could easily see one more decline. Sorry, a B wave, I guess. We could easily see one more decline here. Let's look at pound euro. That's becoming rather confused on pound euro. We've got this ABC, that's pretty clear down to there. That's 1, 2. I mean that could be 3, 4, 5. That looks impulsive. So this could just be an ABC, quite a strong ABC decline, which might well bounce quite soon. Again, nothing crystal clear here, but again, unless 1.12 gets taken out, in which case this thing here wouldn't count as an impulsive decline. It counts as some kind of B wave. But a bounce between now and 1.12 would be quite encouraging. Let's just condense this chart a little bit. We'll look at the slightly longer term pattern. Okay, yeah, it's all we got down to almost 1 there. Now that's the pattern. This pattern is not as clear as the pound dollar. We've got a pretty clear indication, but the pattern on this chart is, although the declines are 3s, the rallies aren't necessarily impulsive, so it's definitely different pattern, and the whole thing could actually be just a big correction, which could be over. So maybe we're heading back towards that 1 level. It seems a little unlikely. The pound seems to be in slightly better shape than the euro, with all these various countries having all the problems that they're having, with more probably to come. But the chart pattern is not hugely positive. Before we go, I just want to have a look at FTSE again. Just want to give you that support level, the wave for support. Okay, it's the low here we're talking about. Came in on the 30th November, and the low was 5519. So that's one level to watch. Of course, also this red line is a 200-day moving average, so that was that held rather nicely for the lows here. Worth watching that if anyone locus not. I mean, on this occasion it was a 100-day, held quite nicely in December. So these things do move around a bit. If we saw acceptance below this line, that would be of some concern also, that we may be seeing a bigger decline coming in. And again, even on FTSE we have got this possible 1, 2, 3, 4, 5 wave pattern. So even if it's impulsive, I'd expect a solid bounce at some point if we're going to see new lows. The new lows aren't mandatory, could already be in, but if we do go lower, then 5519, 5500 and the 200-day moving average are all things to be watching, and a bounce is very likely, given that even if it's impulsive, then we're due a rally after the fifth wave. Okay, that's all for this weekend. I hope you found it interesting and useful. I'll be back on Tuesday morning with a report for subscribers, and I'll be back earlier if I see something that merits a comment. Have a great weekend, and thanks for listening again. Bye bye.